Now we're ready for our staffing worksheet. Our staffing worksheet is what determines how much we're going to spend on employees and contractors. Now, I want you to make sure that you look back at your execution strategy. And if you haven't watched execution strategy yet, I recommend highly that you watch it, because in that exercise, what we did is we created org charts. And these org charts can actually be used to transfer right over to your financial model and input as part of your staffing worksheet. So there are some things to consider as you're working through your staffing model. Staffing models are really, really important. So we got to know how many people we're going to hire and when we're going to hire them. Sounds pretty basic. We got to know how much we're going to pay them as well. And this is a very important question. The next question is, should they be contractors or should they be employees? That's a really important question, especially for a new business, because a new business might actually start by taking on some contractors and then start slowly converting them over to employees, which actually is more cost efficient. But initially, you might not be able to afford that employee that you want, so you have to actually contract them. So let's ask some questions. Will I outsource overseas? Maybe to India, maybe to South America, maybe to Ireland, maybe to Russia or the Ukraine. That's very possible to do. And then what are the market rates? Not only there when I outsource, but what are my market rates here for both contractors and employees? Super important thing for you to know. Also, you need to understand what the cost of the employee benefits are. So federal taxes, state taxes, if you're doing anything international taxes need to be calculated into this as well. So I like to actually use anywhere between 15 to 20% to take into account federal taxes, state taxes, and all medical benefits as well. And that's a really good rule of thumb. In fact, our model will take care of all of that for you, so you don't really need to worry too much about it. It's very easy to input some variables, and then the model will calculate everything from there. Now, one thing I really recommend is that you use salary.com to figure out what you should be paying people and use that for the salary estimates actually in your model. So if you're unsure about which positions, how much they cost, you can go to salary.com and it will not only tell you by region or geographical, it will be adjusted by geographical region, but also by individual position and the type of position. They're very, very specific. I really love salary.com. And by the way, you want to make sure whether you use this for your financial projections or not, you want to make sure you're aware of it, because your employees are actually looking at it, or the people that you're hiring are looking at it. They use that as their foundation to negotiate with you. So you better know what it says. Salary.com, check it out. Now, when you're forecasting, I want you to consider a couple of things. First of all, it takes a long time to recruit people, especially executives. I can tell you this from firsthand knowledge. Individual rank and file employees can take 2 to 3 months to recruit, especially in a hot job market. And right now, as we're filming this, we are in a hot job market, so it can take even longer. Now, executives can take 6 to 9 months. I have recruited many executives over the years, and it's never actually gotten easier. It always takes about 6 months to find the right senior executive for your business, so keep that in mind as well. You've got to factor this recruiting time into your overall staffing model, because you think people are going to come on, and all of a sudden, I see this in every business. It takes 3 months. They forecasted somebody's going to come on in February, and it's not till April or May that employee actually comes on. So make sure that you at least know that going into this. Also, major milestones in your business. When are you going to need that staff? When is your business ramping? What milestones in the business that are driving that? So for instance, new product lines, maybe that you're expanding, or you got a huge marketing activity going on. You might need customer service reps or other people that are actually going to be able to support the business. Or maybe you're coming up to a big product release and you need more people to actually get this product release out. That needs to be factored in as well. So what are the things that are driving the overall hiring in your business? Product releases, new store openings, distribution channel expansion, new partners that you bring on, sales growth, and signing major accounts. All that can drive your staffing needs. Another question that I get asked all the time is, should I hire contractors or should I hire employees? And this is a question that's very, very important. So a couple things I want you to keep in mind first. One is the cost. I want to make sure that you understand that contractors typically are more expensive long-term than employees are. That just the rates are different. The contractor has to pay their own taxes. They don't get medical benefits, which might be a savings to you, but in their hourly rate, if you actually do the math, they can be 50 to 100% more than an actual employee when you hire them. However, not always can you actually start with hiring employees. So you might have to start with hiring contractors. In fact, in all the businesses that I start, I typically start by hiring contractors. It's a great way to get going, and I don't have to commit to the employee. So there are advantages initially. You will pay a little bit more, but you don't have that commitment because you're not sure, well, am I going to have demand? Can I only have them work 20 hours a week or 30 hours a week instead of full time? So you do get flexibility with a contract. You don't have to lay them off. It's already, you go into the relationship knowing that it might be a certain number of hours, it might not be. So they're all set up to do that. So it's actually a great way to start. Now, the other thing that I want you to consider as to whether or not you go with contractors or employees is actually take a look at, do you need them permanently or not? If you need somebody permanently as opposed to temporary, then you might want to think employee, go employee. Also, seasonal employees can also make great contractors as well. So keep that in mind as well. Before even considering whether or not you should actually bring contractors into your business or not, you actually have to make sure whether or not it's legal, because there are state laws that actually govern whether or not you can hire contractors, and does that worker actually qualify for contractor status. So I want to make sure that you consult your state and local laws before you actually get too far into this, and you want to make sure that you're all above board with whatever you do, because certain states like the state of California really police this, so it's very important. Now, there's a list of considerations on our website that you can take into account, and you can download this. There's also a nice handy sheet about pros and cons of whether you should hire contractors or employees. So go ahead and check out our website and download what you need. When trying to determine whether or not you should hire somebody, I want you to consider a couple things. I like to do what I call a staffing ROI, or a staffing return on investment of that individual employee. So you want to hire that employee and you say, this employee cost me this much, but how much revenue can that employee actually create? If they can create more revenue than they cost, then it may be a worthwhile hire. Now, I will say that not on every employee can you do this, but on a lot of employees you can. So let's say, for an example, that you have a consulting business and you want to bring on a new consultant. So their salary is $100,000. The other thing I want you to consider is, what's their utilization rate? Utilization rate is how much can you actually bill them for? How much can I bill them out at? And that utilization rate in this particular service business is 80%. So when they're fully ramped, they'll be at 80%. So I know from that calculation, then their bill rate, if I calculate their bill rate, that I can bill them at about $200,000 a year. But they only cost me $100,000 a year, so I'm in pretty good shape there. In that case, I would hire that staff member. I would bring that person on. The next thing I want you to consider as you're looking at your staffing model is the staffing classifications. Now, this is really important. This is a must-have. The model will not work unless you classify each employee into a category. So simply all that staffing classifications are, there are different categories that you put individual staff members in. And this actually is very important because all of your financials will actually flow from these classifications. This is how expenses get classified so we can actually generate a profit and loss statement. So let me give you these classifications so we can understand a little bit about what they are. There's only 4 of them. They're pretty easy. First one is G&A. And you might have even heard this term before, but not know what it meant. Well, actually what it means, because nobody actually uses its official term, general and administrative. And that represents any administrative costs, things like CEO salary, where the CEO or the founder is actually not contributing directly to revenue, but they're managing the overall company. So a CEO can actually be classified into a couple of different categories as well. Accounting, anything around finance gets put into G&A costs. Facilities management, and a lot of times IT internal costs, not external, but internal costs will be categorized here as well. Our next classification is cost of goods sold. And cost of goods sold is any staff member that is responsible for delivering revenue to your company. I say that very carefully because I want to make sure you understand this. Most people get tripped up with cost of goods sold. It's kind of a confusing term. Sometimes you'll hear somebody say COGS. You're like, what are COGS? COGS are very important, right? They're anything that is required to deliver, any employee or contractor that's required to deliver your product or service to the end customer. I say that again because I want to make sure you understand it. This does not include things like sales or product development or R&D. It's not anything to do with actually what we call below the line. All those things are below the line. This includes such staff members as product researchers, developers and coders, product management, project management if it's actually related to development of the product itself, R&D personnel, engineering and engineering management if you're in a tech business. Maybe you're a retail location, so store development or store developer would actually fall into this category as well. So this is anything to deal with the development of your product. Now, sales and marketing is the last classification. This is any staff members associated with marketing or selling your product or service. Pretty simple. Things like telemarketers, salespeople, sales executives, sales management, marketing coordinators, event specialists, a CMO or a VP would also fall into this category. Now, there's one thing I want you to consider around a classification overlap. You might say, hey, Ken, I actually have an employee that kind of cuts across 2 different categories. How do I classify them? Well, there's 2 things. One is either pick the dominant category that they fall into, number 1, and just put all of their salary in that category, or number 2, split their salary. Just make 2 entries in the model, one for the category and one for the other category, and you're good to go. This is a pretty accepted practice, so don't worry too much about it. Now, we have a complete list of all employees and classifications as a reference sheet in our website, so just go to our resource section and you can download that. I really hope you found this video valuable. Now, the best conversations start with you, so make sure that you leave a comment, a question, or maybe a takeaway that you got from watching this video. And you're not only going to help yourself, but other entrepreneurs as well. We're adding new videos all the time, so make sure you subscribe to our channel and get access to all this great content that will help you build your business. Oh yeah, make sure that you also share this video with a friend because they can benefit from it too. Be sure to visit entrepreneurnow.com to subscribe to our newsletter, Launch. Now, you'll get exclusive access to articles, free videos, interviews with world-class entrepreneurs, access to our live events, and insider tips that you can't get anywhere else. Thank you so much for watching. We'll see you next time on Entrepreneur Now TV. If you want help with making your business a huge success, then go to entrepreneurnow.com and learn from successful entrepreneurs that will take you step by step through the process of creating and growing your business. Whether you need help with things like a business or financial plan, your overall business strategy, tactical marketing and sales execution, or obtaining financing, we will be right there every step of the way to help you. Every entrepreneur I know benefits from having someone right there as they launch and grow their business. So we provide one-on-one and group mentoring to all our members. In addition, our members get access to on-demand videos, all our live events, financial planning tools, and a library of worksheets and resources at their fingertips. And the best part of all is you're part of a community of entrepreneurs that learn and inspire each other. So now is the time for you to take action. Go to entrepreneurnow.com and join us today. Price is what you pay, value is what you get. They went from 5,000 beta testers to 75,000 beta testers literally overnight. So on an income statement, very typical that you have gross revenue less any adjustments equals net revenue. And that's actually how it works.